For me, I think developers need to do a better work with advising clients. If you don't know the purpose for which your client is investing in, and you can actually mislead the client, and then that's where erosion of trust then happens. People don't really buy houses. People buy assurance, expectation, people buy needs.
The only way you can get repeat business is by giving your clients an experience, by not just selling them a product, but by ensuring that whatever it is you deliver to them goes beyond the product. So you're advising them, you're guiding them through the process, always there for them whenever they have any questions or any inquiries, right? And you educate them. People don't even know how to spend money. They have this chunk of money, they don't know how to spend it, they don't know what to do with it.
The end game really should not be you winning.
Yeah.
The end game is, how does the client also win? That's really it. What can people say of you or of the transaction? I've had somebody come to me. I tell them upfront, if you intend to own a generator, it probably is not the right development for you. I'm also being very mindful of the person who's going to be cohabiting in the estate itself.
The neighbor.
Versus doing everything to say, just bring the initial deposit and we're fine.
Yeah.
What you project sometimes may not go as planned. But if, as a practitioner, you're able to sweet talk the person just into starting a journey you know they can't finish, then you haven't played your advice.
You haven't played your role.
You should actually under-promise and over-deliver.
I'll confess, we jumped on the bandwagon of those over-promising because we felt that's what is going to move the market. Most people are not really looking so much at the whole fancy. A lot of them are just looking for a place to call home. Those who don't intend to live there, they are looking for a good return. Unlike what is going on in the marketplace where people just want to sell at all costs, right? Promise things that they don't have the capacity to deliver.
And they know they don't have the capacity.
They know they don't have the capacity, but it's all marketing gimmick.
Funding is almost everything to a project. You can have the best designs. If the money is not there, nothing happens.
Nobody was willing to give us money. And the only people who are willing to give us money, beyond even just the cost, the requirements, your house as collateral, everything. So literally you're telling them if anything goes wrong, this house is yours. It was a no-no for us. I was literally carrying my products on my head on the street like this, like, come and buy my house. It was that bad. Right? I had to stop the project because we just didn't have money to go on.
At the end of the day, you're in business to make profits.
There are some times in business where profitability becomes secondary.
Yes.
You just want cash flow.
For somebody who's aspiring to be a developer or somebody who's already engaged and 6 ways to practice his business better, you can't jump on every money that you come across. You may as well even be digging a deeper hole by doing so.
Correct.
I always try to advise people that they shouldn't borrow from banks because every single day that you owe the bank, you are in trouble. As far as they're interested, they're giving you money and they want a return. Hello there, my name is Architect Akinde Olamido, founder of the Detail Apartments, and you're welcome to Square Meter Stories. Square Meter Stories is a podcast birthed by the Detail Apartments where ideas, topics, and trends regarding real estate are discussed and simplified for your understanding. Real estate remains a proven strategy in building wealth, hedging against inflation, and securing your future. Now, to be successful at real estate, because of course you could make very costly mistakes if you're not better informed. So to be successful at real estate, you must have the right kind of decisions. The objective of this podcast, therefore, is to demystify the many mysteries, ambiguities, and complexities surrounding real estate so that by giving you the right information, you can have the best possible decision so as to hedge inflation, build wealth, and secure your future. On this episode today, we're going to be talking about property development from the perspective of a property developer. There are so many property developers out there, and there are some with good intentions and not so good intentions. But we want to talk about property development so as to be able to help you be better informed about the things to look out for when investing in properties. Now, to do justice to this topic and the related topics that I'll be treating, I have in the studio with me my guest, Bamidele Adeole, who is the CEO of P1 Stars. And I'll just read a brief profile about him. Now, who is Bamidele? Bamidele is a finance professional and property developer. He is a seasoned finance expert and entrepreneur with a passion for real estate investment, financial advisory, and business development. With a proven track record of success, Bamidele has been instrumental in executing multi-million-dollar transactions and advising a growing client base on wealth management and investment strategies. As a thought leader in the finance industry, Bamdele has authored several insightful reports, facilitated numerous seminars and webinars, and published a book, The Smart Investor's Guidebook, in 2020. His expertise has been showcased on several TV stations such as Channels Television, TVC, Plus TV, and other prominent media outlets, as well as in print media. As the CEO of P1 Stars, a fast-growing real estate development company in Lagos, Nigeria, Bamdele drives the company's vision with his entrepreneurial spirit, inspiring a team of motivated professionals to achieve exceptional results. His leadership has positioned the company as a major player in the industry. Bamdele is a member of the Institute of Chartered Accountants of Nigeria, ICANN, Chartered Institute of Stockbrokers, Chartered Institute for Taxation, and Standard Chartered Institute for Securities and Investments, UK. He's also a member of the Securities and Exchange Commission in Nigeria and an authorized dealing clerk of the Nigerian Exchange Group. Wow, what a loaded, I'll call kind of resume. Bamdele, it's so good to have you on the show. Thank you for
Thank
coming.
you. Thank you for having me.
All right, so we're just going to jump right into it, right? Because property development, from a property developer's perspective, we want to try to peel some of the mysteries and some of the misinformations, right? The misconceptions that people have about property development. Definitely, it's said that, most, if not all, millionaires did so by owning a piece of real estate. And so it's always a good way to start to build wealth. Can you talk about how important it is for people to consider real estate as a sure means of building wealth and securing their future?
Okay, thank you very much for having me once again. Now, you are 100% right. Real estate is one of the ways through which most millionaires or billionaires became what they became eventually. So for someone like me who is an investment professional, I'm quite versed in the investment space. So I understand that we have several asset classes. You have stocks, you have bonds, you have treasury bills, you have all sorts of investment classes, and you also have real estate. Now, each investment class has its advantages and its sort of peculiar benefits, right? For instance, stocks, you could make a whole lot more returns in stocks than you can make in real estate. Let's be frank, right? In a very short period. So you could buy a stock in the morning and in the evening you already make 20% ROI. You can't do that with real estate. It's not possible, okay? If you take something like crypto, for instance, in seconds you could make 30%, 40% ROI, right? But the issue with those asset classes is the risk, right? So when I'm looking at returns, I like to look at returns from a risk-adjusted perspective, right? And from my own understanding and from my own experience, and I'm not saying this because I'm in the industry, I'm saying this because I understand how investments work. From a risk-adjusted perspective, real estate gives you perhaps the best returns. And it's one way through which you can actually build wealth consistently over a long period of time, as long as you do it right.
Right.
Okay, so people have obviously gotten their fingers burnt and all of that in the past, so it's not like, oh, once you just go into real estate, it's guaranteed that you'll make money. No, you have to do it right. Invest with the right company, invest in the right place, and all of those things. Once you tick all of those boxes, then there's a very high chance that you're likely to be successful and you can build wealth over a long period of time versus many other asset classes where you make money today, you could lose the money the next day. So that's my own perception of real estate.
I think, because some other people say, the reason why real estate is one of the, if not the best asset class over a long period of time is because it is real. It's
Absolutely.
Something you can figure out. It's something that is there. It's something that you can actually touch. Versus some other asset classes, like you mentioned, cryptocurrencies, right? It is more or less, the way I see it, some sort of speculation. And for you to understand it, you have to be like a very good expert on it. And even at that, there are also risks to those kind of asset classes.
Yeah.
Like you could lose everything in just 1 second.
In a few seconds.
But a house is not something that just disappears. Like that, right?
No, it doesn't.
Okay, very good. So now, thank you for giving us that introduction. Now, for people who worry about inflation in the economy, right? Inflation basically is how prices increase over time. And we live in a country where today, I mean, everybody knows how much we're buying fuel, right? I mean, in the average filling station, they say it is 895, but you go out there, in some places, you're getting over 1,000 naira. And that's it at your own income.
Correct.
But real estate, there has to be something to help you make more than what you're spending. So if inflation, as they say, is over 30%, just how good could real estate return money for you if you do it right?
I would use a short story to answer that question, right? So we have one of our projects in Shangutedo that we are currently developing. We're not done with it yet, but we started that project some years ago, about a year and a half ago. And when we started the project, a client bought into that project we sold a 2-bedroom to her at 19 million. That's how much
That's
we sold 19 million, right?
Okay.
Today, that particular 2-bedroom unit is going for about 39 million, and we are likely to increase the price very soon. And when we increase our prices, we usually increase by at least 3 to 5 million. So the next price might be 42, 43, 44 million. So in the space of barely 12 to 18 months, this particular person has made over 100% ROI, right? Now you just mentioned inflation. Inflation is somewhere around early 30s, 30%, 31, 32%.
Yes.
So it's early 30s, right?
Yes.
Now, this lady has by far outperformed inflation in terms of her returns on investments. So I don't need to say much more than that. This is actually a live case. It's a real case. It's not something I made up, right? So that already tells you that investments in real estate can and actually does outpace inflation.
Okay.
Now, this is just return in terms of capital appreciation. Remember that I said the place is not fully ready yet. Now, the moment that place is ready, she's not just going to be earning capital appreciation, she's also going to be earning an income on rentals. Because she's not based in Nigeria, she doesn't intend to live there, right? She's based in the US. So what that means is that she's going to continue to enjoy capital appreciation. And then if she decides that she wants to rent it out, either on a short-let basis or on an annual rent basis, right? She's going to get even more returns on investments. Now, for annual rents, the returns are not as high as inflation, in all honesty. What we have in Nigeria is approximately 5, 6, 7% ROIs.
On an annual basis.
On an annual basis,
Yes.
right? But then if you add that to the capital appreciation that you get when the value of your property increases, inflation is not even a problem.
I see.
So in both monetary terms and real terms, by monetary I mean the actual return devoid of or without considering inflation, right? In both monetary and real terms, you're making good money from real estate.
Okay,
Yes.
that's great. Okay, so it's very good to have that kind of example. So laws now related to somebody who is hesitant to invest because it's better I put my money, for example, in something a little less risky, like treasury bills. Okay, treasury bills today is probably around 25%, and that's if you lock it for 1 year. Versus somebody who says, I decide not to trust. And because, of course, there are many touching stories and many heartbreaking stories of people who didn't invest right in real estate. But let's talk about it from a devaluation kind of perspective. Okay, the Naira continues to perform very poorly, right? As of today, it is about 1,600 Naira to $1, for example. So for somebody who did not invest, say, for example, a year ago, and who had the capacity to invest 19M for that particular apartment, would that person be able to afford that kind of a property today? And what would that property probably afford that individual from a devaluation perspective? Because people have to realize how important it is to take your money very seriously in putting it in places that can help you perform better. So from a devaluation perspective, what do you think about an individual, for example, who didn't make that decision at that point in time?
Well, for that kind of a person, I would say, let me answer the question this way. As an investment professional, I try to educate my clients. I don't just sell to them, right? As a property developer, obviously I want to sell my properties, but before I do that, I try to educate them. And interestingly, I have quite a number of clients based abroad, and this issue of devaluation always comes up. And what I try to tell them is that you do not judge an asset, the performance of an asset, based off of variables that are outside of the asset's control.
Explain, please.
So what that essentially means is that you cannot say, because the Naira has devalued by X percent, right? because I hear this being said all the time, if your related asset has increased by a certain percentage, and that percentage is less than the percentage of the devaluation in the Naira, then it means that your asset hasn't performed. That's the general conception, or
Yes.
that's the general idea that people have. Now, that's not very accurate, because the reality is that the asset has done what it's supposed to do, which is to appreciate. So you don't benchmark an asset's performance against currency, right? You benchmark an asset's performance against inflation. Because what you're trying to do is you're trying to find out what is the value of my assets today compared to what it was yesterday. And then what's the value of the money that I had yesterday compared to the money that I have today. That's essentially what you're looking at. So you're not so much looking, devaluation is only just one of the components of the inflation equation. Okay, so inflation is really the benchmark, not so much devaluation. Okay, so because if you're looking at devaluation, you're always going to get, the market is always going to be volatile. Dollar is always going to go up. Sometimes it comes down. It actually does come down some. There was a time it went up to as high as 1.8.
Yes.
And then after a few weeks or a few months, then a few weeks, it went back down to like 1,000, 1,100 now. Then it went back up again to like 1,314. Then it went. So it's always going to oscillate, right?
Yes.
But the inflation rate is a little bit more stable. So it's a lot easier to compare your ROIs against inflation.
Right.
So to answer your question, I would say, look, don't think too much, especially if you are based in Nigeria. Don't think too much about devaluation. Just think about the value of your Naira, which is the purchasing power, which is based on inflation. Is your investment at least meeting, if not exceeding inflation? If the answer is yes, then you're good to go. Now, for those who are based abroad, what I tell them to do, because I have quite a number of clients who call me and say, oh, the Naira is not doing so well, should they still invest? And I tell them, look, the best thing to do is to do what we call matching strategy in FX hedging. So there are different hedging methods. You can buy futures, you can buy forwards and all of those things, but those are very advanced techniques. The very simple, basic technique to use as a foreign investor is matching. So what does that mean? What it means is that if you have expenses or obligations in Naira, in Nigeria, right, you simply match your ROIs in Naira with your Naira obligations. So that way you're not repatriating. You know, the losses typically happen when you repatriate.
Repatriate back to the currency.
Back to the currency, back to your...
in.
Exactly. So if you're in the US and you're investing in dollar, you convert dollar to Naira, and then when you get your returns, you then repatriate those Naira. But then you're likely to suffer some FX losses because Naira would have probably depreciated over that period. So what I tell them is, if you do have Naira exposure, which most people who are based abroad, a lot of them do have Naira. A lot of them have dependents. They have dependents. They have maybe people. They have other projects. They have other projects. They are funding.
Yes.
They have charities. They have foundations. They have different obligations. So just match your Naira. So it's Naira versus Naira, dollar versus dollar. Once you are able to plan your portfolio in that manner, then you're not likely to have any problems. That's the way I see it.
You see this very fiduciary obligation that you have assumed as not just a developer, as an advisor to your clients, right? Probably is what sets you apart, you know, because I know a few of your properties and you're a stickler for delivering as promised. Yes, I know your properties, right? You know, so for me, I think developers need to do a better work with advising clients. Because if you don't know the purpose for which your client is investing in, then you can actually mislead the client. And then that's where erosion of trust then happens. Because what you sold to me, or at least what you promised me, isn't what I'm getting. You know, because you said something very, very important I want us to highlight here is that you must match your investments with your exposure, or your exposures, your expenses. So the principle of matching basically is, if you have, and everybody certainly has some kind of obligations financially, or some exposures financially in Naira. So rather than liquidate, or to change your currency and then expend on something that you do not have the ability of that thing to work again for you in meeting that recurring expense, you rather invest it in an asset that can produce what would cater for those obligations. So it's a very good one. So I want you to, you know, share with me probably one or two other ways that you have worked with a client in truly helping them meet their needs. And I really want to emphasize this point, you know, because it's more than just selling a home.
Yeah, it
You know,
is.
because when you, like I said, fiduciarily, when you are able to help a client meet a particular need, and then that need is hidden within the offering that you're presenting, then you've helped the person achieve a particular goal. And then that person can thank you and say, meet this person if you want to do business. Because at the end of the day, everybody sells houses.
True.
But you know, I was sharing with somebody on that episode. I said people don't really buy houses. People buy assurance. People buy expectation. People buy needs. You may
Yeah.
think they're just buying a house. So I want us to now talk about what other areas really can you say you have value added um, advice to a client in helping them meet these peculiar expectations, these peculiar obligations in a manner that people don't generally do.
For me, like I said earlier, it's really about advisory. It's not just about selling the home. So I want my clients to win. So it's a win-win for me. It's not just win and lose, or just sell the house and make your profit and go. No, I want my clients to be, because one of the strategies that we're trying to deploy as a company to grow our business is to get repeat business.
Yes.
So, and the only way you can get repeat business is by giving your clients an experience. And how do you
An
give your clients an experience?
experience.
Yes, how do you give your clients an experience? By not just selling them a product, but by ensuring that whatever it is you deliver to them goes beyond the product. So you're advising them, you're hand-holding them, you're guiding them through the process, you're always there for them whenever they have any questions or any inquiries, right? And you educate them. Very important, because a lot of clients or potential clients out there are very much uneducated regarding real estate investments.
Very much so.
People don't even know how to spend money. They have money. There are people who are middle class people, upper middle class, even upper class, some upper class people who have this chunk of money. They don't know how to spend it. They don't know what to do with it, right? So it's part of my job to educate them, not just to sell them a property. Okay, so there's this client that I have who, she came to me, she works in a big company, very big organization, and she says she has this amount of money. She doesn't know, she spent money in the past on different things. She's lost money, she's gotten her fingers burnt, and she's looking to do real estate. And I told her, I sat her down, explained everything to her. I told her how the kinds of payment plans that we have. Now she's working, so she has a very good job. She has a decent salary. So she doesn't have the amount she doesn't have the 50 millions or the 100 millions to just put down on the property at once. So I gave her different options. I told her, look, we could do mortgage, right? That's one option I gave to her. I also gave her, obviously, I gave her a company payment plan, and I tried to make the payment plan as convenient as possible. So one of the things that I do is, I won't just tell you, we allow over 18 months. No, I would ask you, what is your cash flow? How does your cash come in? What is convenient for you? You know, so I try to ask as many questions as possible of my clients. I don't just do, I do very little talking when I'm conversing with clients, because I want to understand their needs. I want to understand their peculiar situations, because every client is peculiar. Every client's situation is different, right? So she told me what her cash flows were. She told me what her potential obligations were and all of this. And so it was based on all the information that she gave me that I was then able to craft a payment plan for her, which is what she's using till today. Now, of course, I've also given her other options. I spoke about the mortgage and a few other options here and there. But the point I'm making is that I feel as developers, again, I cannot overemphasize the need to ensure that you play an advisory role when it comes to selling your properties. It's not just about just buy the property and then you walk away. No, you have to ensure that you understand the peculiarities of each person and give them solutions, because you are actually a solution provider. That's what you are. The houses that you're selling are just tools that you use to provide those solutions. Exactly, because everybody has a problem that they're trying to solve.
Agreed.
Right? It's not just the lower class that have problems. Even upper class people they have problems. That's why they're coming to you. So it's your responsibility as an advisor. See yourself first and foremost as an advisor, and secondarily as a developer. If you approach your business that way, right, not only will you have happy clients, you're likely to also have a bigger organization which will stand the test of time, because you're going to have clients who are going to act as ambassadors. And in this lady's case, because she was so happy with the way we handled her transaction, she has referred if I'm not exaggerating, maybe close to 10 people to us. Not all of them have bought, obviously, but
Yes.
the fact that she keeps referring people to us shows
Yes.
how satisfied she is, and that really makes me glad.
Thank you so much. I want to highlight another key thing that you said, because for me, these are nuggets, not just for people who are seeking to invest, but for people who are also active practitioners like yourself and myself, right? Because
Yes.
you have to focus on the end game really should not be you winning.
Yeah.
The end game is how does the client also win?
Yeah.
But if you never listen upfront to what the client is expecting, or
Yeah.
because sometimes clients are uneducated, and that's
Yes.
why you are the professional. That's
Yeah.
why you are the person as a service provider. You have to guide the person, you have to educate the person, and then you have to now paint a picture based on everything you've heard in what the person should expect as an outcome. So at the end of the day, you're walking the person through what you said is an experience. And that
Yeah.
for me was just like a mind blower, right?
Yeah.
And I said, that's really it. What can people say of you or of the transaction, of you holding their hands and walking them through, whether it is finding out how their cash flows are, whether it is trying to invest them properly, advise them properly on the path that they should use in investing the chunk of money that they have.
Yeah.
Because I've had somebody come to me, and I said, this probably isn't at this moment the right property for you.
Exactly.
Versus you just doing everything to say, just bring the initial deposit and we're fine.
Yeah.
Because the misconception that just drop the initial deposit and wherever it is you want to get the money, you will get the money. I mean, how often is it that people will come back to you and say, this particular property, I really can't afford it at the end of the day? Then you may not have really done your own job.
Yeah.
Because
Correct.
quite all right, life happens.
Yes.
What you project sometimes may not go as planned.
Doesn't go as
but
planned.
if you, as a practitioner, you're able to sweet talk the person just into starting a journey they can't finish, then you haven't played your advice.
You haven't played your role.
Can you speak
Correct.
to that?
Yeah, I mean, I absolutely agree with everything you said, 100%. So there are some times that I tell people, just as you said, I'm not so sure this is what you're looking for, right? Because as a company, we have our target market. So we're not for everybody.
Yep.
We're not, I mean, I don't intend to serve the upper class. That's not my target, right? I have my reasons. Obviously, the upper class, they have, like I said earlier, they have their needs, they have their wants, but I feel where we are currently as a country, I think the priority should be on the more affordable type. When I say affordable, that's relative.
It's
obviously.
very relative.
It's very relative, but I still believe that we should try to serve the other classes first before we start thinking of the upper class, right? So my target is more the middle, lower middle, and upper lower. So the upper lower, the upwardly mobile, the young guys, the 22-year-olds, 25-year-olds that are doing fairly well, earning decent income. Maybe they work in a bank, work in an oil company, telecoms company. They're earning fairly okay, right? So those are the people I target. And what I try to do is I try to play big brother. So I try to put myself almost like a big brother to them, to advise them, almost the way I would advise my kid brother or sister, right? So when they come to me, when I do my ads and they come to me, like I said earlier, I ask them questions because I want to know what they want, okay? And there are certain situations where I just tell them, I don't think this is the right thing for you, right? Just where you are going, what you intend to do, what you intend to achieve. Perhaps maybe you should go elsewhere, look for something different. Maybe, for instance, you work on the mainland, your office is on the mainland, your entire life is on the mainland. I don't have any properties on the mainland. So there are situations where I could even tell them that, look, maybe you should probably look for something close to where you work, because I know how stressful it can be commuting all the way from the mainland down to Shangote, where we have our properties, right? So there's sometimes I advise them, I said, look for something. Other developers within the environment or within the area, the neighborhood where you live, why don't you look for something that would suit your needs and also your budget? So that way, and a lot of them actually appreciate it. They appreciate my honesty, they appreciate my transparency, they appreciate my genuineness. And who says this guys sometime in the future can come back later and say, look, you know what, I now live or I now work close to where you have your products, I think I want to do business with you. More often than not, at least one or two of those kinds of people would come back to you because they feel a sense of almost like an obligation to want to do business with you because they just feel you are very honest with them.
Yeah.
Yeah, so that sort of answers the question, I believe,
Okay,
that you
so
asked.
oftentimes, and I want to kind of like segue into funding, of real estate,
Okay.
where you meet a particular client or a potential buyer, and maybe this property is ill-fitted for this person, maybe probably because it's not the person is not affordable for the person, or the person's cash flow won't support the purchase of that particular property. And then as
Absolutely.
a developer, you also are looking and trying to balance the funding of the project. Funding is key. Funding is oxygen to the project. You have no funding, the project can't go anywhere.
Correct.
And for the project that you recently concluded and what that is almost completed, right, at
Yes.
Ajay Akpata, the
Yes.
edifice. I think that's what it's called,
That's what
right?
it's called.
The
Yes.
edifice. How would you say you navigated funding challenges, along the lines? I want you to speak to that, because we're in a very volatile environment. You're always battling the hike of material prices. Vendors are also coming back to you saying, this particular thing that we agreed on, I mean, for this period that was valid, that things are changing now, this and that. So relative to how you also expect people, to purchase, and sometimes your fiduciary responsibility in telling them you can't really afford this particular thing versus the challenges that you are facing on a daily basis with funding. How do you manage to balance all of that? And then also talk about funding of the edifice. How were you to pull it off?
The edifice was a very interesting project, very challenging, to be honest, very, very challenging, because it was really our first shot at housing at the time, and we really didn't know so much of what to do. We had to sort of learn as we moved along, but it was rewarding. Now, the issue of funding, we tried to get funds from banks, didn't work. The few banks we spoke to, now I'm not talking the big commercial banks, because there's a bit of a sort of hesitance to lend to real estate
Real
because of the
estate.
perceived risk.
Correct.
Yeah, so a lot
Correct.
of them don't want to lend to real estate.
Very
We've
correct.
approached a couple of them. They said no, 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 no. Even if they try to process it, it's going to get stepped down at some level.
Some level.
Either at management level, legal is likely to step it down. So we just didn't even bother ourselves. So we decided to start going through or talking to smaller microfinance banks and finance houses and project finance companies and all of that. So we spoke to a few of them, but their rates are very expensive. The rates were very expensive. And when I did the maths, being an accountant myself, I did the calculations, it just wasn't working. My Excel sheet was just telling me, no, 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 this is not going to work. Red all through. So I had to start thinking creatively, like, so what else can you do? How can you raise funds? But then I also remembered something that I've read in books, self-help books and things that I see on the internet. And it says that you don't have to wait until you're ready before you start, right?
Right.
In fact, there's even a saying that if you start when you're ready too late.
You're late.
You're late.
You've missed the train.
You've missed it already. So you start before you're ready. So then that then tells me that what I should do, or that told me at the time that what I should do is, rather than waiting for the money to be available, just go ahead, roll up your sleeves, and then start, right? Start selling off plan. Okay, so obviously at that point, the strategy was to raise funding from off plan sales. Okay, and then we went through an aggressive marketing campaign, right? Because we didn't have any choice. We didn't have any money from anywhere. Nobody was willing to give us money. And the only people who are willing to give us money, beyond even just the cost, there was something else I didn't mention, the requirements. You have to put down your house as collateral. They would ask you to give them your documents, your house documents, your deeds of assignment,
very stringent kind
your
of
Form 1Cs, everything. So it's literally you're telling them if anything goes wrong, this house is yours. So you could come at any time and kick us out, right? Because we defaulted on the loan. So they would ask you to put all that down, and then you still have to give them corporate guarantees. You have to give them personal guarantees. You have to sign that my own personal, I'm putting my name on the line.
Yes.
So it was a no-no for us. We had to just walk away from that process. Okay. And then we realized that at that point in time, what was expedient was for us to get funding through off-plan sales. And that's what we did. And so we went on an aggressive campaign. We were doing our marketing. We were talking to strategic investors and all of that. And we eventually got one person who decided to buy a 3-bedroom unit, and he paid over 2 months. Right, so that was the seed.
That was oxygen for you.
That was the seed capital, if you like, that we used to start the project. And then we started the project. We got it up to foundation level, and then first floor, and then at a point, that man's money had been exhausted and we were back to square one. Okay. So I was like, oh my goodness. So how do I move from here? But we still kept on marketing, but the sales weren't just forthcoming, because we were a new player. We didn't have the reputation of the bigger players, right? So we weren't able to pull that sort of patronage that the bigger names, were pulling in the industry. So that was the challenge for us, But we had to keep going because we didn't have a choice. We started the projects anyway. We've collected someone's money. So if anything at all, we have to deliver to, even if it's just for that person, for the sake of that person, we have to deliver. Yeah. So we're at a point of no return. We have to just keep going forward. So we stepped up the marketing drive. I was literally carrying my products on my head on the street like this, like, come and buy my house, come and buy, it was that bad. Right. We kept on going, campaign after campaign. We were spending money on ads, we were speaking in different places and all of that. So we had a period, to be honest, there was a period where we had to stop the project because we just didn't have money to go on. Now, I'm being very honest with you. We just couldn't go on because we just didn't have the funds, right? But we didn't stop marketing. Okay. So we kept on marketing, and eventually we got someone, we had to give the person a good discount, right? Because at that point, I wasn't even thinking about profitability at all. At that point, in my head, I'm just thinking, just give me the cash, right? So there are some times in business where profitability becomes secondary. Yes. You just want cash flow, right? Because cash is the blood of the business. Yes. That's what keeps the business alive. Yes. Okay. So for me, at that point, this lady based in the US, she came around and she looked at it. She said, well, she likes it, she's likely to buy, but we have to give her a huge discount. And I had to negotiate that discount with her, and she said she was going to pay over a short period. That was the incentive for us. Okay. Right? The fact that she was going to pay over a very short period. Yes. So she did pay over that short period. We gave her the discount, and that was what we then used to take the project to the next level. Right? Now, because the project then kept on going, and we were moving at a certain level of speed, it was then a bit easier to then sell to other people. So this was around month 6, month 7. Okay. We had sold 2 units, and then we had already gotten to the sort of the structure was more or less standing. We had done block setting and all that. We hadn't plastered. So it was a bit, so you could actually see the building standing, right? So anybody who comes for inspection, they're already in their minds, they're picturing a completed unit. So that then made it a bit easier to then sell to those other people. So again, we continued with our marketing drive, and then we were able to raise a bit more funding through sales. So it then got to the point where we were now then comfortable because we sold within a space of about 2 months or so, we sold about 4 units or thereabouts, and most of them paid large deposits. So that then gave us the funding.
Because the project had progressed.
It had progressed significantly at that point. So we then got that money, and then it was then easier to then finish up the projects. And so that was really our story. So we didn't get any external funding. The project was 100% self-financed, meaning that we funded it through internal sources. We didn't borrow anything from anybody. Yes. Now that was good for us because it then meant that our cost of funding was 0. So in the scheme of things, when you're doing your profitability statements, there's always that line, cost of funds. I always put it there. So it was 0 for us, right? So that at least helped us profitability-wise, right? But for us, we felt that was not the best approach to go about doing business because, for instance, how about if that lady who eventually who gave a discount, who gave us money, how about if she wasn't forthcoming, right? How about if she didn't, because we've seen projects that have been abandoned on the streets, so many of them, and it's because of lack of funding.
Well, with some other factors as well.
Some other factors could cause it, but I would say one of the major reasons why that happens. Okay. Of course, there could be litigation, there could be other problems as well, but one of the reasons why you have abandoned projects is because there's no funding. So what we've decided as a company to do is, we would lean on, to a large extent, on off-plan sales, but we would also keep looking for different ways to get funding, whether it's through strategic investors, whether it's through getting grants. Now, I understand that some charities, some foundations give grants to real estate investors. Okay. I just heard about that recently, so we're also exploring that. Now, there are different avenues, so we are trying to explore as many as possible, right, so that we increase our options. Because you just never know where the money is going to. For me, I just want the money to come in. I'm not really so bothered about where, as long as it's affordable. Yes. You understand what I'm saying? As long as the money is not too expensive, it's affordable, whether it comes via a loan or it comes from a strategy. So one of the other things that we're also doing is now, because we have delivered this project, some of the investors who bought into that project are also thinking of funding our subsequent projects as well.
Okay.
So that's an advantage of being able to deliver.
And deliver well.
And deliver well, yes. Exactly. Yep. So that was why at that point when we were selling, it wasn't so much about profitability. It was just, let's just deliver this thing. Let's make a mark. Let people know us for a certain level of quality. That way, it's easier to then do subsequent projects because you have something you can show as evidence of your good works. Right. In fact, when I do my marketing nowadays, right, for subsequent projects, the first thing I do is to show them what we've done in the past. To say, in case you are doubting us, just see what we've done. Yes. We've done this, we show them the interior of our show apartments, we show them the facade and all of those things and the beauty of the development that we've done. That then gives them more confidence to then give us money for this or for subsequent projects. So it's really a combination of different things that we're looking at exploring right now. But as long as it's not too expensive, then we're open for it.
Okay, so thank you so much, for being very, very open, because like I said, funding is almost everything to a project. If you can market it properly, you can have the best designs, you can have the best locations.
Absolutely.
If the money is not there, nothing happens.
Nothing happens.
Nothing happens unless a sale is made, right?
You can't buy cement without money. You can't buy iron rods without money.
And in this economy where people can't even take your word for it, they want their money now.
Yes.
It's not about,
credits, no.
IOUs have gone with the wind.
Not in this.
Now.
No.
So, why I want us to expand a little more about that, you mentioned something about it wasn't about profitability. And I want people to be able to catch that in the right context, because at the end of the day, you're in business to make profit, but not all monies are equal in the sense that you also have to weigh the cost of acquiring. And I'm happy you touched on that, because as an accountant, you can say cost of funds and then I can get it, but for somebody who's aspiring to be a developer or somebody who's already engaged and seeks ways to practice his business better, you can't jump on every fund or every money that you come across and you say you want to sink that deal, because you may as well even be digging a deeper hole by doing so.
Correct.
For whatever project you want to get into, it's good to get your cost right. And you call this something, say your profitability chart, right? If you look at all of that line item where it says cost of funds, whatever money you're getting that is not self-financed, right? What is the cost of that money? And how does that impact your bottom line? Say, for example, if you projected 100 million as your profits, right, on a particular project, and you knew that by accessing funds, right, be it a loan or whatever, an investor or somebody who just wanted to help the project get along with a promise of a return, and the person said it's going to cost you 30 million. If you look at your finances properly and you say, okay, this is something that I can actually trade off, then you could actually go at it. But, I want people to understand that it's not just about getting money. You have to, for yourself, and you deal with numbers, you're an accountant. It's easy for you to immediately assess the viability of an opportunity and to go for it. But for somebody who is a non-accountant, you must also have advisors on your team. You must have somebody who can look after that part and say, at this time, this is not the best option, or you shouldn't be doing it at this cutthroat rate at least.
Correct.
I always try to advise people that they shouldn't borrow from banks, except if it's to bridge a particular funding gap.
Correct.
And you're automatically sure, or you're almost sure rather, of where that money is going to come out from to pay that loan back. Because every single day that you owe the bank, you are in trouble.
In trouble, yeah.
Except you pay that money back. And I heard from somebody, it's not my own experience, because for me, I'm always very touchy when it comes to loans, right? I really would not do that. But for this particular person who hadn't perfected certain things about his documentation with regard to approvals and such like that, and you've collected a loan, and then your site is now shut down, and the banks, as far as they're interested, they've given you money and they want a return. Nobody waits for you to say, okay, because you have this other difficulty. So for accessing financing, you also have to be very, very careful that you've ticked the boxes of other crucial factors that could impact on that line that you have drawn from somebody, so that at the time frame that you have already budgeted to apply the money, and the result that you expect, the returns that you expect to draw out of applying that money, You can do all of that so that in terms of financing, there is a clean and proper transaction between yourself and your financier, yourself and your investor. So I just wanted to expand on that a little bit so that people aren't just drawn by the fact that any money is good money, or that you're giving a discount for the fact that you want cash flows. You, as an accountant, has already assessed the cost of, because for you giving a discount is a cost of funds, so to speak.
Yeah, absolutely.
In context.
Yeah,
because
the discount is the cost.
It's the cost
Yes,
itself.
it's the cost in
So
itself,
you have
yes.
written that off because on your profitability chart, you know that you can knock it off what you're expecting and still
Exactly.
drive the project to completion.
Completion, correct.
Exactly.
Yes.
So I want us to also talk about, from an ethical point of view,
Yeah.
what are things that developers should do better in terms of ensuring that a promise given is promise kept? What are things, and this could range from how you go about execution of your project. This would go from what it is you say you're going to do with a particular property, the amenities that you promise and such like that. There's such a thing such as over-promising and under-delivering, which should actually be the reverse. You should actually under-promise and over-deliver. So what are those ethical things, that people should practice better in terms of development?
Well, I think you've already answered some of the questions, or you've already given a bit of a clue regarding the answer to give to this question. So I'll start from the point you made, which is over-promising and under-delivering, right? So when we first started, we sort of, I'll confess, we jumped on the bandwagon of those over-promising, like, we don't have this, that, because we felt that's what is going to move the market, right? But then after some time, we realized that some of those things don't really move for informed investors, right? Most people are not really looking so much at the whole fancy extras and all of those things, right? The bells and the whistles. A lot of them are just looking for a place to call home, right? For those who want to live there. For those who don't intend to live there, right? They are looking for ROIs. They're looking for good returns. They're looking for a place that will give them high capital appreciation. They're looking for a neighborhood that is peaceful, is calm. They're looking for a place that is close to the main road, that has infrastructure, that is well organized, that is built to a certain level of quality. So unlike what is going on in the marketplace where people just want to sell at all means, at all costs, right? So people tend to promise things that they don't have the capacity to deliver.
And they know they don't have
They know they don't have the capacity, but it's all marketing gimmicks, right? So we have decided to stay away from that. Why? Because I'm a firm believer in the principle of delayed gratification, right? So that's what I do. That's what drives me. That's one of my my principles, my core principles is delayed gratification. I would rather sacrifice short-term gratification for long-term benefits. Okay, so I'd rather not make as much sales as I would have made if I'd made all those promises. I'd rather make that sacrifice now and ensure that I have a client base that is not going to be complaining 2 years down the line or 3 years down the line that we promised to do this, we didn't do this.
Exactly.
Right? So I'll only promise what I know I can conveniently deliver. So that's one ethical thing that I think developers should improve on, right? There's no need, except if you are doing something luxury. Remember I mentioned that my target is not the upper class.
You know your market already.
I know my market. So if my market was the upper class, then of course, by all means, I would do the swimming pools and all the bells and whistles because I have to serve that class. That's what they want.
Yes.
Right? So they are going beyond just the need for accommodation. They already have the accommodation. Some of them have multiple houses already. So they're looking for what extra thing can you give to me that would really excite me? But that's not what I'm serving. Those are not the people I'm serving. So I don't do all of those things. So I try to make it as basic and as simple. And that doesn't mean that we don't add those extras, right? But we don't emphasize that too much. What we emphasize is our expertise, our knowledge of the business, and our ability to deliver on time and on budget. That's one thing that we try to do. I think another ethical thing that developers should do is to try and embrace green technology, right? So that's one of the things that we're doing as a company.
Right.
We're trying to cut out the use. In fact, we have a policy in all our developments, no gen. We have a zero tolerance for generators, right? So we're trying to see how we can incorporate inverters and solar systems to power our devices, right? In fact, one of the things that we're trying to do interestingly, I just had a meeting with one of our investor vendors yesterday, and they were trying to take us through how they can actually install water pumps that are solar based, so the solar based water pumps.
Right.
Yeah, so it just gets its energy from the sun, then it starts to work, and then it pumps water. It doesn't take any energy from, you don't have to use a generator.
Correct.
Right. So those are some of the things, some of the initiatives that we're trying to deploy. Other things like, for instance, solar heaters, water heaters.
Yes.
Right. That's not very common. Right. But it's something that we are exploring, solar street lights and things like that. So we're trying to go green, because we believe that our responsibility is not just restricted to developing properties, but also ensuring that we preserve the environment.
Yes.
Right? We actually play that role in ensuring that we are very active in issues around climate change, around ESG. ESG means environment, social, and governance. Right? So it's one of the core UN sustainability concepts that they keep promoting and they keep supporting. So we are trying to key into that concept as well.
Right.
So we try to ensure that we don't do any projects that lead to any form of displacements. Any form of displacement, whether be it social or otherwise. Okay, we do not discriminate in terms of race. We do not discriminate in terms of religion, sex, whatever it is. We try to be as fair in our dealings as possible. So those are some of the ethical things that we do. And we also try to encourage. We are also trying to engage communities in our developments so for instance, laborers, both skilled and unskilled, we try to engage them in terms of giving them employment opportunities for our projects, even if it's just on a contract basis. They do work for us, we pay them off, just so that we are carrying everybody along. So for us, it's not just about profitability, but it's also about sustainability.
Right.
Because I believe that the more of these things you do, the more sustainable a business is likely to be. Because I want this business to outlive me.
Yes.
That's the dream of every entrepreneur. You want your business to outlive you. So the way to ensure that your business outlives you is to put some of these pillars and structures in place that ensures that 50 years, even 100 years down the line, the business is still running.
Thank you so much. I want to kind of expand on something that you said. I just keep picking nuggets from the things that you say. The efforts, or kind of like the seeds that you sow to the minds of your own subscribers as regarding going green. The environment is polluted, and we have a responsibility in trying to fix that. We have a responsibility in trying to promote green energy. And what you said about your position or your posture towards generators, it echoes so very, very vibrantly with me, because for my own development, right, what I do is I tell them upfront, if you intend to own a generator, it probably is not the right development for you. So upfront, I tell them that, because not just because I want to promote the environment, but I'm also being very mindful of the person who's going to be cohabiting in the estate itself.
The neighbors.
How often would you go out, hustle, bustle of the day, you're at home where you ought to rest, and then you come from the noise of the office, and then you're at home, and then there's a new noise you have to deal with.
Especially those smaller gens.
I'm telling you, see, this is development here, but we have to do things that increase the life expectancy of our own clients as well.
Correct.
Somebody who is supposed to be resting is now battling with the fumes of the generator, the noise of generator, your stress levels over the night, instead of decreasing, are probably increasing, and then you wake up the next morning even a lot more stressed than you were.
Exactly.
And then the cycle just keeps going on. Why is it that people are just falling sick every day? So what are we doing to ensure that we take care of that part? For our own developments too, we also make it very important, right, to have people invest in green energy. And so what we did also as well, and I just want to build on that, was we actually give subscribers 2 solar panels, right? And what we do, and what that does is, in their own mind, planting this seed of, if I've given you this, I expect you to take it and as well build a system.
Yes.
Okay? So that you yourself can see the benefits. When this person is using a solar system, your neighbor is using a solar system, and everybody's in a solar system, even the environment, the ambience is enhanced. And then you look forward to being in a place of peace, quiet and solace. Which is exactly what we are trying to give to people. So I think you lending a voice to that and also practicing it. If you practice it, I practice it, and the next developer practices it, then it's our way of also contributing to a cleaner environment.
It's actually called impact investing. That's what impact investing is all about. It's not just selling a product, but making an impact. within your environment and to the world at large. That's what impact investing is all
Oh,
about.
thank you so much, Abel.
Yeah.
Thank you so much. Okay, so I want to know now to bring this whole episode to a wrap. As a developer, of course, I mean, with your project, which we're almost done with,
Yes.
you have learned a lot of lessons, and also along the way too there are some wins that you have also celebrated. So as a developer, and you're also taking on, I think, two other projects that I think I'm aware of.
Yeah, about three. Yeah,
About
four,
three?
four in total.
Okay.
That one that you mentioned, and then
Yes.
3 other projects.
Okay,
Yes,
great.
so 4.
So what's the most rewarding thing for you? I mean, having delivered this first project, let's talk about this project that you're almost done with.
Yes.
What's the most rewarding thing for you about finishing the project, delivering that project from inception, conception, all the way to delivery? What's that thing that makes you very proud about it?
For me, it's just there's the fact that I've been able to provide a service to my clients. That's the first thing, because I'm in business because of my clients, first and foremost, right? So the fact that I was able to make a promise and deliver on that promise. Now, was it perfect? No, it wasn't. We had our challenges. Every project has its challenges.
Correct.
Right? Life itself is full of challenges anyway.
Correct.
So it wasn't perfect, but we were able to pull it off, right? And my clients are happy for it. I've not had any single complaints from any of the clients regarding the quality. The only time one person complained was just in terms of the speed, and that was because of the delay that I mentioned earlier that we had because we were looking for
funding
funds.
gap.
Yeah, the funding gap, right? But in terms of quality, there's been no complaints whatsoever. So that in itself gives me joy.
Okay.
Right? The fact that these people are happy with their investments. In fact, one of them called me the other day and she was telling me that she wished she had met me earlier, right? You imagine how good it feels
Those are the
when
kind of
someone
testimonials
says,
that you live for.
they're lovely. I mean, my heart
Yeah.
I just leaped for joy. I was
Yes.
just so excited about
Yeah.
that. So I even asked her to do a video testimonial, but she declined. She said no, she doesn't want everybody to know that she's
Well, which
invested.
is understandable anyway.
Yes,
but-
some of these clients want to just maintain that anonymous posture.
Yep.
But I get that kind of feedback as well from other subscribers, similar to that. So that feedback is what really makes me happy. Not so much the profitability, because like I said earlier, it wasn't so much being our first product. The objective wasn't so much make all the money in the world. It was just make a name for yourself with this project, right? So that joy, and I think there's going to be a bigger joy when people start living there, because people haven't said we're planning the handover ceremony in the next couple of weeks, right?
Okay.
So when we hand over and then people start living there, I can imagine myself going into the place and just meeting with the people who live there, whether they're the homeowners or tenants, just having that one-on-one interaction with them. I think that's going to be an absolutely mind-blowing experience as well. So yeah, for me, primarily, it's really just the fact that we delivered and our subscribers are happy.
Okay, thank you so very much. So we are going to bring this episode to a wrap now, but before we do, we have an Achievers Insights, where there's something that we ask every guest about how they would advise someone who desires to step into their own shoes. So as a developer, I mean, there are listeners out there who also want to be developers of some sort someday. What would be your 3 key nuggets or 3 key top things that they must put in mind as they try to work their way up to being a property developer?
Okay, well, for me, the first thing I would say is build structure, right? So this is a general advice for anybody who wants to go into business, not just real estate. Whatever business you want to go into, the first thing you should be concerned about is build a structure, because you're not going to be there forever.
Yep.
Think long term. So this is tied to my long term sort of concept of my approach towards life generally, which is always long term oriented. So build a structure to ensure that your business is there, continues to run, even if you're not there, right? It's often said that the test of the strength of a business is if that business can run if you're away, even if you're away from the office for 3 months. Right? So if you are away from the office for 3 months and you're not doing anything and the business is struggling, there is a problem with the structure. So the very first thing you need to watch out for is the structure of the business. Okay? The second thing I would like to say is for an aspiring developer is to understand what properties are all about. Understand the business itself. Now, because of the nature of the country we operate in, there's free entry, free exit. So everybody can do real estate. Anybody can register a company today and start doing real estate. And you're a developer. Just go somewhere, buy land from one of Monile and then start selling. You're a developer, right? But that's not really property development. Property development is a lot more technical than that. It requires a whole lot more understanding the business. I'm still learning. I can't say I know it all. I still have a long way to go, but I'm certainly not where I used to be when I first started.
Definitely.
Right? So I've learned some things formally through self-training, and I've also learned quite a bit from the job itself.
Yes.
So you should always have a learning. You should always be ready to learn and unlearn and relearn. Right? I cannot overemphasize the need to learn as much as you can and understand the business before you get into it. There's sometimes you wake up in the morning and your heart is heavy. There's sometimes you don't even want to get out of bed because there's one trouble or the other, one client chasing you, want this. So you have to understand what it is that you're going into and understand the business. Very, very important.
Yes.
The third thing and the final thing I'd like to advise is don't cut corners.
Don't
cut corners. Do
Don't
not cut corners. Don't be too much in a hurry to make all the sales in the world because your friend who started at the same time that you started is making billions every month. You want to make billions, so you tend to want to cut corners, right? Don't. It's a patient game. It takes a while to build a company, especially in the real estate space, because of the peculiarities of the business. It's a business that requires a lot of capital. Okay, so it's not the kind of business that you just go into and you expect that you're going to be making the money immediately. It takes time to build a good real estate business. So be patient. Don't cut corners. Do things properly. Be ethical, and don't do anything illegal, right? And you will still have problems regardless. Whatever it is that you do, you'd have your challenges, but at least you have your peace. And I think for me, peace of mind is the most important thing in life. Right? It surpasses the need for money. It surpasses the need for financial benefits. Once you have your peace, you're good to go. Your business would definitely thank you for it.
Thanks so much. And so those are the insights. So you must build a structure. You must study the intricacies of the business itself. And then you must not cut corners. In other words, follow processes and ensure that you're never in a hurry as you build your way up to becoming a developer. So that's been our time on this episode of Square Metal Stories. I want to thank Bamdele Adewale once again for being on the studio with us.
Thank you very much.
And until next time, please do take care and God bless. Thank you very much.